All right. So now one thing is that above the 50 zone is the premium and below is the discount here. This is the best place to buy. Any point below the 50 zone is the best point to buy. Any point above the 50 zone is best point to sell, right? And looking at this swing from this point to this point, if you're looking a very good, if you're looking for a very good entry to enter, right, you have to wait until it gets into this zone. So let's say we don't know what has happened here. We are looking to take our buy within this area. So what am I going to do? I'm going to mark out this box first, right? Okay, there's no need to mark it out. Let's just go down to a lower time frame to see if we have anything that can support our decision in here, right? We have a fair value gap in here already that has been respected quite all right. Came back to respect the fair value gap once again, taking out this low before buying, right? So if you are to judge from that, if you have to judge from that, it's actually a very good entry for a buy here, right below the zone. Now, from the 1 hour time, 1 minute time frame, let's see if there's anything interesting here. There's a series of fair value gaps here, which I believe is respected as well. This one over here was respected, this one over here. I think it respected the tip of this particular one here. Let me show you that. This tip, that's what I came here to respect before disappearing, right? So sometimes this market has a way of giving us what we want, but we need to break down the charts way, way down to get the best entries. Okay, now in this particular case, the market has got, let's say you didn't want to enter here, you want a confirmation, right? The market got into this point, right? What next you're waiting for is, of course, this is a swing, this is a high, right? This is a lower low. Now, a confirmation to actually know that, okay, this buy is valid, right? Is for this high to be taken out. And where was it taken out? It was taken out at this very point, right? It was taken out at this very point. So since it was taken out at this very point, what you're looking for now is a retest. And what best point can you use as a retest zone is fair value gap over here, right? Because this is actually a confirmation. Now, if you don't want to aggressively enter right in here, right? Because if you look at it, there is no clear input, there is no clear support to go in with anyway, right? So if you are looking for a better and clearer confirmation, this is it over here. And if you're entering here long, let's say you want to work with the tip of the zone or just any points inside of the zone, inside of the fair value gap rather, you can use that as your entry. Use the low of the candle that give rise to that fair value gap as your SL. That means you're using the low of this candle, right? As your SL. Just any point below the low is your SL. And you're targeting this. Let's say you're not aiming for much, you just want to target the previous high, right? You want it to be taken out. So with that, you're already more than you've already gotten like more than 50% of the move. So you're talking about roughly 15 pips. You're risking 4 pips for 15 pips ratio 3.85. All right, that's what you're looking at to get from this very point, right? And of course, the market has moved. Now, in cases like this, you can also take advantage of jumping on the trend. Jumping on the trend, meaning that if you see more fair value gaps um, that occur, those are like your entry points still, right? You have fair value gap one. This is one. This is two. The market came to respect the first one. Did it get to the second one? No. Will you get to the second one? That is possible. All right. Now, when it's confused in this way, you might want to go down to a 1 minute time frame to see if there's anything interesting. And at the 1 minute time frame, we are seeing a large fair value gap here. Seeing a large fair value gap, right? This very one here. And what did the market do? The market came to it, right? And is respecting. Now, if you're entering here, also bear in mind, if you're entering at this particular point, there are series of fair value gaps below. But there's a possibility, right, that the market might not want to respect these lower ones because of this series of um pause. I'll call this accumulation, right? Before the market made a decision. Right? There's a possibility that it wouldn't break this low. In fact, if I've not entered this trade at all, right, and I decide to enter at this point, my stop loss will be right below this um this candle. Because if you break this candle, it invalidates the buy signal I'm seeing, right? So if you want to enter again, right, you can enter here and have your stop loss right below this point, right? Targeting the same high, all right? So your mantra is, or your core idea will be, if this low is broken, if this low is taken out, this particular low is taken out, I'm not interested in being on this trade, right? In fact, if it comes to managing your risk, yeah, you can also want to take your SL either to break even or tail it, tail your take your SL with any nice, interesting low you're looking at in the market. Because if that low is broken, there's no need being on that trade. All right. But before you do that, check the higher time frame to be sure that you're in line regardless. But I'm telling you that if I'm on this trade and this low is taken out, I'm done. I can't entertain the buy anymore. And as you can see, market is respecting it and of course going moving towards breaking this high you're looking at here. All right. So these are ways to actually follow the market. And with this method, you need to be actively on the charts, right? As if you want to work on, um, if you also work with trailing the stop loss, if you want to work with a trailing stop loss, right? You need to be actively on the chart. If not, set your parameters, leave it, give your trade a breathing space, allow it to run, right? Allow it to just run with your first entry. And see what's happening here. Allow it to run. Okay. So that's it about that. So now, first of all, you can see that we came to this time frame, right? We saw from the okay, I didn't even work from the daily time frame. And so the daily time frame is like even okay, from the daily time frame, I think I no longer need this. This is what the daily time frame is like. This low here was swept yesterday, right? This low was swept, taps into this fair value gap in here. In fact, I drew this fair value gap at one time, hoping the market will get to it, right? But it didn't. And it was yesterday that the market tapped into it. This was a fair value gap. I can't remember when I drew this. I think on February 14th, roughly 2 weeks ago, right? Okay, no, on the 18th, because it was after this very day. This was on a Tuesday, right? So what happened here? The market came yesterday, daily chart, respected this guy, and of course disappeared. So with this, you can tell that we are looking at a bullish market perhaps today, right? Or the daily time frame is bullish, right? You are chasing towards breaking this high, right? So instead of looking for this high, let us look for lower points that we can entertain, right? Before the market makes the main huge move it's about to make. What next are you gonna do? Go down to a lower time frame All right, this is 1 hour time frame. The 1 hour time frame is still bearish, sort of. Right, the 1 hour time frame is still bearish, but if you look deep, you're gonna see that some intermediate highs have been taken out. Right, this was when it respected the zone. Okay, we have series of um high I'm not gonna get it that high, low, high, low, lower high, lower lows, as the case may be. So the highest point that gave rise to this lowest point is this particular point over here. And this is it, right? These are some ways I used to judge my idea to make sure I don't rush in, or to make sure I don't rush into trades. Let me use this. This is the highest point, right? That gave rise to that low. Now, in this particular case, if I'm taking this trade, right? If I'm observing it from a 1 hour time frame, the market has already given me an idea for a buy. All I need to wait for now is a confirmation to go in, right? And that confirmation is in this pullback, right? I can simply look at it now. In this pullback, I'm seeing a fair value gap that was respected still, right? Let me just show you. That's if I'm doing this analysis, yeah, from the 1 minute on from the 1 hour time frame. And of course, with the 1 hour time frame, this point here cannot be my TP. I'll be targeting this area over here, 156.148. Right? I'll be targeting this high over here. I want this high to be taken out. Right? So since this last high here has been taken out, I wait for a pullback. What's the best pullback I can get? I see a fair value gap here. I use fair value gaps a lot because for the longest time, they've proven to actually work, right? So I see a fair value gap. This is my point one, right? And this is my point two, right? So what happened? The market came in, right? This is not that straight, oh. All right. What happened? The market came in, respected the fair value gap, came in, took out, came in again, respected the fair value gap like twice. Right now, in this case, if you're working with this fair value gap, you have to have a healthy amount of stop loss, right? Since you're trading with the 1 hour time frame. Now, if you decide to enter here, let's see what you'll be risking and with what you are looking at. So let's say you decide to enter at this very point. Your stop loss should be, of course, below this low, right? And I'm targeting this high, right? Look at the risk, still healthy, 4:1, right? Looking at 56 pips, risking 13 pips. That's still healthy, right? So this the same thing we did on the 15 minutes, on the 1 minute time frame also. That's what we're doing on the 1 hour time frame, based upon what the daily chart is telling us, right? Based upon what the daily chart is telling us, and what the charts, even the 1 hour chart we're looking at, is telling us. So in this case, I'm in this trade now. If I extend it, I'm in this trade now, right? For the 1 hour time frame. You can see the market gave me a little hit or no much hit, right? It played around my stop loss zone a little bit. If I've entered using the 1 hour time frame, right? My high, it is very point here, right? In this kind of trade, you can set it and leave. Now you have two running trades now. First is your 15-minute trade. That the high is this. Then you have your major trade. Now this can be for the swing traders or intraday, intraday heavy, and the day traders. You understand? Possibly the market will get to this point before the close of day. At least we'll have two sessions before New York ends. Before New York session ends. It might have given you what you wanted. All right. So this is how to look at the market. You don't have to complicate or overcomplicate things. All right. Rule number one is if you're seeing a buy opportunity, right? Whatever time frame you're looking at should tell you that yes, this is buying, right? It is not bad, perhaps, right? To take a direct buy from this very point. It's not bad, right? Now, one good thing you do for yourself is to break down to a lower time frame to see that this downward movement here, the trend has switched. At this particular point, you cannot tell the switching trend. That means what I'm saying is if you decide to buy this fair value gap, this daily fair value gap that was expected, you decide to buy it, you need to go down to a lower time frame. At the very point you see this trend switch, look for a confirmation, then you're in. Right? So let's do that right now. 15 minutes time frame. Okay. Have a high, have a low, we have a high. Okay, this one is not so clear, right? We'll go down to 5. Remember, if it's not so clear, leave it. Go down to a much lower time frame. So have series of highs and lows here in between, right? But the main thing is we have a low that gave rise to a high that gave rise to a lower low. So if you are judging with the highest point, right, that gave rise to this lowest point, is this particular guy here, right? So this guy becomes my major high I need to look out for, right? So for me to start entertaining any buy opportunity, any buy idea, I would want this high to be taken out. And what happened? It was taken out right here, right? It was taken out right here, came in back, broke officially at this point, giving us a fair value gap. So if I'm looking at to buy this trade, I'm not buying at this point. I'm not buying at this point. I'm buying at this very point. So I have my fair value gap. So where's my entry going to be? Right in here. Where's my stop loss going to be? Either below this or below this. I see what I'm saying. Either below this candle or this particular one. So, and if I'm entering here, where am I targeting? I'm just targeting, I'm just targeting the high, right? From the 15 minutes time frame. Okay. From the 15 minutes time frame, I'm just targeting this high that give rise to this low. That's where my target is, right? So as you can see, I get in here with my, of course, my long position. I'm getting at this particular point in between. I have this point, so I have this point as my TP. Then of course my SL will be right below this area. So this is like 10 is to 10, 10 RR. I'm risking 7 pips for 78 pips. All right. This is how to break down the market. And if you see right here, it makes real sense. All right. It makes real sense. And how long do you take for the market to get to my point? It took quite a while, right? It took quite a while because it's a higher time frame entry, but how to break it down to a lower time frame so that we can get what we want, right? This is like a run from three to, of course, around from three open of New York yesterday till midnight. It's a healthy trade. This kind of trade you set, close your eyes, and leave. Once you get up the next day, that's it, your TP. All right? That hit your TP. It takes a lot of discipline as well. It takes a lot of discipline as well, not to always look at the chart. Because if you constantly look at these charts, you might tend to close either too early or too. One thing I've learned, yeah, whatever I see at the beginning of my analysis, I just have to allow it to run. Because whatever I think I'm seeing later is not really what's there. Just the market trying to, mess with my head and all. Because if you start adjusting your SL, your entry, blah blah blah, give it time. You're gonna see that at the end of the day, the market later made that decision or later made that move you anticipated. That's just it. That's just it. Right? So that's it about that. I believe and I hope you got something from this session, Mr. Wittiman. I believe and I hope you got something from this section.
Yes, I do. Yes, I do.
All right. So that will be end of the call for this morning. All right. Tomorrow we'll still break it down more so that it will be ingrained in us, right? And also one last thing before I leave, right? In your getting better at this, right? Over time, determine the kind of trades you take, right? Determine the kind of trades you take. For myself, my trades don't last. Like if I do my analysis well, my trades don't last more than 2 hours. The average time my trade lasts between from 9 minutes to 2 hours. So 2 hours are very, very rare, basically. 9 minutes to 2 hours. So once you determine the kind of trades you take and know whatever profit you're making from it is enough for you, right? With an equivalent risk, you're good to go. Now, if you see that your kind of trades take a little bit of time, now do your analysis likewise, right? So me, sometimes I'm not really, I just use the daily time frame to know where I'm going to. That I come down to like the 1 hour time frame, self. Sorry, the 1 minute time frame. Catch, if I'm using gold, 10 pips is enough for me. 10 pips is enough for me for the day. Sometimes 20 is like, oh, amazing. God buttered our bread. 6, 10, 15, 20 pips, that's enough. I don't go more than that. But there are some persons that aim for 50, 60, 100 pips. Right. So at the end of the day, determine what works best for you. My kid bro, my kid bro goes for like crazy amount of pips. He's a swing trader. You understand? So that's just it. All right. So all the best, family. All the best, and have an amazing day.
Thank you.
Mm.